Hello, I'm Ros Goodall and I'm going to talk about ethics and ethical behaviour. I'll start by giving you an introduction to business ethics, then cover how an organisation can create an ethical culture. I will talk about ethical business practices and give you some examples, and finally I'll cover how to monitor the implementation of an ethical policy. Martin Luther King said, "The time is always right to do what is right," and that applies to companies as well as individuals. Business ethics is important for organisations, and discussions about business ethics can evoke some powerful emotions. Some argue that nothing should interfere with the duty of a company to maximise returns to its shareholders. However, on the other side, there is an argument that companies must consider the expectations of their various stakeholders and the influence this has on how they conduct their business. Increasingly, it has been found that those companies that have a strong ethical stance have outperformed others. Companies that are mindful of the ethical concerns regarding their operations understand that they can play an important role in the development of society, either locally, nationally or globally. In addition, we have seen a growth in the number of social activists, environmental protesters, members of voluntary and civic society organisations, and increasingly concerned citizens who want to ensure that the organisations that they have contact with have ethical values that they can relate to. It's not uncommon for ethical protesters to buy shares in companies and ask questions at shareholder meetings, and for those encounters to be reported in the media and disseminated via social networks. Mining, energy, food and pharmaceutical companies have all been asked about the ethical issues surrounding their products. BHP is an Anglo-Australian multinational mining company, and they're under pressure from corporate shareholder activists to accept advisory resolutions from shareholders. This is part of the momentum for companies to take greater account of the shareholder views on corporate ethics, governance and environmental sustainability. Shareholders seek to have a greater voice in the affairs of the company. Business ethics is about conducting operations to the highest possible standards of conduct. Doing things ethically. Companies can thrive if they have a good reputation. There may be occasions when companies have to face multiple ethical systems, in particular if they have dealings with cultures that are different from their own. A company may have a strict gifts and hospitality policy that does not cater for the customs of the countries where they want to do business. What is important is that a company doesn't restrict itself to operating within the letter rather than the spirit of the law. Integrity is about doing the right thing even if nobody is watching, and ethical behaviour can bring significant benefits to a business. For example, they may attract customers who are at ease with buying products and services from a company they know that sources their materials and labour in an ethical and responsible way. This can boost sales and profits, and it can protect a company's brand. Secondly, it may attract employees who want to work for and stay with the business, thus reducing recruitment costs, and enable the company to get the most talented employees and increase their productivity. When working for a company with strong business ethics, employees are comfortable in the knowledge that they are not, by their own action, allowing unethical practices to continue. Lastly, they may attract investors because the company they deal with has stated their morals and made a promise to work in an ethical and responsible manner. This allows investors peace of mind that their money is being used in a way that fits in with their own moral code and can keep the company's share price high. For example, a coffee company which states all their raw beans are picked from sustainable plants where no deforestation has occurred, by people paid a good living wage, in an area where investments have been made to ensure that producing the coffee for a foreign market has not damaged the local way of life, will find that all these elements of their buying strategy become a selling point for their final product. A company which sets out to work within its own ethical guidelines is also less at risk of being fined for poor behaviour and less likely to find themselves in breach of one of the large number of laws concerning required behaviour. Businesses not following any kind of ethical code can lead to wider consequences. Unethical behaviour may damage a firm's reputation and make it less appealing to stakeholders. This means that profits could fall as a result. Cafe Direct Chief Executive John Still says the key to running a successful ethical business is to recognise that it can be a force for good rather than a selfish deliverer of money for a few. He says ethical businesses are usually less financially driven, but financial sustainability is paramount. Reputation is one of the company's most important assets and one of the most difficult to rebuild should it be lost. Maintaining promises is crucial to maintaining that reputation. It is important to understand that a company's reputation is a matter of perception by various stakeholders. The overall reputation is made up of the thoughts of investors, customers, suppliers, employees, regulators, and the communities in which they operate. A strong positive reputation among all of these can result in an overall positive reputation for the company. Reputation may be better or worse than the actual character or behaviour of a company. And if the reputation is more positive than the underlying reality, then the gap between action and reality can be seen as a risk to the company. If a company fails to live up to its reputation, that reputation will decline until it more closely matches the reality. Back in 2010, Tesco was at the top of its game, ahead of the other food retailers in Britain. However, overambitious sales targets are said to have resulted in the accounting scandal that saw Tesco's reputation plummet. Supply chain ethical risks can have an impact upon the reputations of the companies that use them. In 2013, the Rana Plaza factory collapse in Bangladesh brought to light some questionable practices, either tolerated or unknown by many high street fashion retailers. Organisations often have a set of values or principles which reflect the way they do business, or to which they aspire to observe in carrying out their business. The most common ethical values found include integrity, fairness, honesty, trustworthiness, respect, and openness. They are commonly expressed through an ethics policy and a code of ethics. An ethics policy sets out the organisation's commitment to high ethical standards and the management of integrity risks. The Ethisphere Research Institute in America shows that companies that have principled leaders and a truly value-based culture significantly outperform those that don't. Therefore, the tone management sets will have a trickle-down effect on employees of the company. The majority of employees have a general sense of right and wrong, but they may not understand the legal intricacies of their business. Additionally, there are times when confusion about the often subtle differences between illegal and unethical behaviour exist. Proper training helps keep each employee informed while hopefully preventing errors in judgment that may cast a negative light on the company. The core element of an ethics programme will be the Code of Ethics. Its main purpose is to provide guidance to staff. It does this by translating the organisation's values and its commitments to stakeholders into a way in which it will operate. For both employees and other business partners, it will set out expected behaviours and provide guidance around the ethical challenges and issues that may be material to the organisation. Companies should have an anonymous whistleblowing or speaking up facility in place. This allows employees to report unethical activity without repercussion. Ethical leaders think about the long-term consequences, drawbacks and benefits from the decisions they make in the organisation. The more the leader walks the talk by translating internalised values into action, the higher the level of trust and respect he generates from followers. Be a leader who adheres to high ethical standards in your own professional life, constantly treating others with respect and authenticity. Be willing to talk honestly about difficult ethical choices and ethical grey areas. Adopt transparency in decision-making and communications. Therefore, have an open door policy and regular one-to-one meetings with employees so that they feel that their suggestions and insights are welcome and valued. Allow no excuses and insist everyone meets ethical expectations. Talk about ethics as an ongoing learning journey, not a once-a-year training programme. In 2017, we saw an example of unethical behaviour at Rolls-Royce, where 3 former employees have pleaded guilty in the US to bribery and corruption offences. This was a joint investigation by the Serious Fraud Office, the US Justice Department and the FBI. The employees worked in the company's energy division and bribes were paid to secure overseas contracts over a 14-year period from 1999 to 2013. Public sector organisations must also be aware of ethical issues. The UK government established a committee on standards in public life that was chaired by Lord Nolan. The Nolan Principles 1994 focus on behaviour and culture and the need to put aside any personal interest and act objectively. The areas cover selflessness, objectivity, accountability, openness, honesty and leadership. Ethical finance allows an organisation to make informed choices about the financial institution your company does business with. You can use ethical finance for most business dealings, including bank accounts, insurance, commercial mortgages, investments and savings. Using ethical finance is one of the ways of making your environmental and social commitment known. A company must decide whether to have a negative or positive ethical position. Negative ethical finance means that the product does no harm to the environment or society, and positive ethical finance means that your money is used actively to improve society or the environment. An area that evokes much debate is tax avoidance. Whilst legitimate, it can be seen as aggressive when it involves using financial instruments and arrangements that governments did not intend to be used as a vehicle for tax advantage. Overseas tax havens is an example that is used by many multinational corporations. An HMRC survey of the British public in 2016 found that avoiding tax was the second most important ethical issue that companies needed to address. Excessive executive pay was the number one issue. Companies that operate in industries that have environmental issues, such as waste disposal, need to ensure that the companies that they use for disposal are reputable and comply with laws and regulations. It was reported in 2017 by the Environment Agency that BMW had discovered extensive contamination under a building when they were developing their site. Testing revealed hazardous materials including asbestos. A contract was awarded to Churn Gold Recycling Limited to process the material and make it more stable. It transpired that the company was unable to manage the complexity and the volume of waste and used partly treated material mixed with inert materials to satisfy another contract. Ground workers suffered side effects from the material, which when analysed revealed presence of asbestos. The investigation by the Environment Agency revealed that the company directors knew that they were unable to manage and treat the material, and potential profits outweighed their need to act responsibly. It was a former employee who had informed of the use of contaminated materials that led to the investigation. Let's consider the key indicators of poor corporate culture. In 2016, the International Corporate Governance Network, the Governance Institute, and the Institute of Business Ethics produced a report that identified red flags that highlight poor corporate culture that could lead to frauds. The 5 key indicators were high executive pay or targets which encourage risk-taking to achieve short-term targets, complex legal structures which may be hard for boards and management to understand what is happening within the company, Poorly executed takeovers, which lead to a mix of cultures within a company, with pockets of bad behaviour thriving beyond the control of the board. Poor financial discipline, such as excessive leverage. Autocratic chief executives whose staff are afraid of or fear reprisals. It is important that the owner or champion of the ethical policy of the business has suitable status within the organisation. This is often the chairman or chief executive. It is essential that the policy is monitored to ensure it remains relevant and is being observed. Details of the areas that have been brought to the attention of the whistleblowing line might provide insight into areas where attention should be focused. It is also true of any ethical issues that have been investigated through the normal course of business. Each company is likely to have sources of information that may assess the effectiveness of the policy. I'd like to share 6 with you. Staff appraisals if key performance indicators relate to compliance with the policy. Questions and feedback from ethical training sessions. This might identify emerging ethical concerns within the industry or sector. Investigations and disciplinary action taken may provide evidence of weaknesses with the policy and gives an opportunity to address them. Advice that's been sought from staff and suppliers on ethical matters. Employee suggestions. New staff may have experience of handling ethical issues in another way, and this can be assessed and shared. Stakeholder feedback on ethical matters, in particular complaints. An example of this is when Ladbrokes Coral merged in November 2016. This required a new code of ethics, setting out the standards and behaviours that the company expected from its colleagues, contractors and business partners, wherever they were in the world, whatever their local practices were and wherever they conducted business on their behalf. They have a confidential integrity line, which is independently operated by Crime Stoppers and a dedicated whistleblowing officer within the company. Part of their published KPIs is the number of incidents reported to the whistleblowing line. Thank you for listening, and I hope you found the information interesting.